All right, welcome to Tips Live. Excited to talk to you here again virtually and present a little bit of information. Today we're going to talk about short sales. What is it and how it might affect you or someone that you know and what the options are. So here in a couple minutes I'm going to explain the options that you have or that someone you know might have if they're experiencing a short sale. So we're going to talk about that and why it's important right now, given what we just came through. And then we're still going through. So obviously the economy shut down quite a bit, and we experienced a shrinkage of about 33% of the United States economy in Q2. So that meant that employment was drastically affected, meaning income was drastically affected. The trickle-down effect all the way into real estate, into retail services, grocery, you name it, it was all experienced and is being experienced. So there's folks that we talk to that their lives have been changed drastically. And part of what we do, and we actually just got off of a sales call with our whole company on there, and we talked about being a resource, whether that means actually someone buying or selling a house or investing in real estate. That's not always the number one goal. It's to be a real estate resource. So that's what I'm here today to seek to do, and hopefully pass that on to you. So if there's any information that you can take from this, I encourage you to do so. So a short sale, you've heard it, you probably heard it in the 2008 to 2012 range quite a bit more than you have recently, but it usually occurs, or it does occur, when a homeowner is either delinquent on their home payments, or they're facing some type of catastrophe or reduction in their income to where they're not likely to be able to make the payments any longer on their home. So you've got a delinquency where they're not paying, a catastrophic event, or even they're upside down so much on their home that they wouldn't be able to recoup the market value in order to pay off the loan. So in those cases, the borrower, is faced with a couple different options. So the first option would be to not do anything. So certainly would discourage this, because there are better options hopefully for you out there than to just not do anything. We know that when a creditor or a bank doesn't get paid on time, that the calls persist, and it becomes stressful. And there's a lot of anxiety already if you're in this situation. So those calls do pile up, and the tendency would be to just shut everything off and avoid it and just ride it out maybe as long as you can. But I want to give you some other options that are out there. I'm not an attorney, I'm not an accountant, I'm a real estate broker, but in some cases people will seek bankruptcy protection in this scenario as well. So we have certain attorneys that we have connections with, where we can introduce you for an initial consultation if that is of concern to you in your finances. An additional option is going to be to do a loan modification of some time. So this happens when the borrower contacts their lender directly, and or through the authorization document, a representative on their behalf contacts the lender directly to try to initiate some kind of modification to their current loan terms. So people that may have an interest rate that's a lot higher than the current market bears, sometimes that lender will work with them to refinance the loan to lower the payment. In the case of where we went through with COVID and quarantine, and what we're going through now, forbearance was an option that you heard talked about a lot. Forbearance is where, again, talking to the lender directly, the borrower works out some kind of plan to where a payment or two are skipped and they're added on to the end of the loan. There's all different types of modifications that exist. I would say that it's going to be specific to the lender that you're working with. Now they have guidelines and they have legislation that they need to follow, but it's going to be a decision, just like on any of these options, that's up to the lender and the borrower to come to an agreement on. So those are some of a couple of the initial options. Another one would be to do what's called a short sale. So a short sale is where sale of the home seems to be imminent, and the borrower's financial status is such that they just need to sell it and they're not going to be able to pay off the loan, or they're falling behind enough to where they need to just try to get this situation behind them. So in those situations, we as real estate agents will work through what that looks like with the homeowner. We'll go through all of the different options, get a picture of where they're at and develop the strategy on what they need to do. And if we have the authorization of the homeowner, then we'll then contact the lender and initiate the short sale process. So a short sale process is not automatic. In some cases, a lender may reach out to a real estate agent to help facilitate this, but most of the time, it's initiated by the homeowner themselves and a real estate agent to ask the bank to initiate it to see if it can be approved. And just because it's initiated doesn't mean it's approved. You still have to go out, list, market it, get an offer, negotiate that offer, and then bring it to the bank for approval. So short sales are always contingent on bank approval because, again, they're taking less than what is owed. So it has to be an agreeable solution for them as well. Just as with short sales, forbearance, all of these options where there's a modification or a loss potentially absorbed by the bank do potentially have negative consequences. So as real estate agents, as advisors to the clients, we're trying to reduce the negative impacts on credit score, on future buying opportunities, and just the your financial status in general. So fortunately, we also work with a couple great lenders that do have programs to where we've seen sometimes in the case of even a matter of 2 years after a short sale that a buyer could get approved to buy again. So there's definitely options out there. So so that would be another route, is the short sale itself. If a home gets far enough along where there doesn't seem to be any kind of resolution available, then another option would be a deed in lieu of foreclosure. So in those times, the lender and the homeowner are in contact, and a short sale doesn't seem to be possible, but a foreclosure is not really what the lender wants to do anyway. So if they can deed the property over to the lender in lieu of foreclosing on it, sometimes there's financial incentives that can be negotiated there for the homeowner to deliver that deed over to the lender directly. So we talked about those options of doing nothing, bankruptcy, short sale, and deed in lieu, loan modification. Those are a lot more options than homeowners typically believe there are out there. So in a time like we're in, and a time like we've been in, almost all of us know people that have struggled financially. So if they own a home, make sure that they see this video and they at least get this information. Or if it's impacting you yourself, you can reach out to us discreetly and privately, and we'd be happy to go over these options with you and connect you with the right advisors and consultants, ultimately to help you find the best option that's out there. So you're probably going to be hearing this in the news, at least maybe a little bit more about short sales. I wanted to go ahead and define what they are and what the options are. And the one last thing I want to hit on is when you hear about pre-foreclosure or homes that are in foreclosure, that's a little bit different than what I just described. So a short sale happens, again, it's initiated by the borrower. A pre-foreclosure, I guess, is what the buzz term might be, is a home that has gone into default. The lender was unable to connect with the borrower, and they filed to start the foreclosure process. So technically, it's going through foreclosure, but the foreclosure has not happened yet. So it's in pre-foreclosure, I guess is what the non-technical term would be. So just because it's in that process doesn't mean it's a foreclosure. So then once, if it were to get to the process of making it to being foreclosed on, it would go up for auction. That home could be sold to a private investor at a sheriff's sale. If not, it goes back to the bank as an REO or real estate owned. At that point, it's now become a foreclosure. So certainly those are all things we want to help homeowners and avoid. But I also kind of wanted to clarify some of the terminology that gets thrown around out there. So looks like my video is a little bit blurry, so hopefully you can tolerate the information as I got through it there. But if you do have any questions, definitely feel free to reach out. We've got a lot of information on our website, theindypropertysource.com, as well as our Facebook page. You can find us at The Indy Property Source. We're on Twitter, Instagram, Google as well. So definitely seek us out. We'd love to talk to you. We'd love to go over options. If you know anybody that could use our help, please reach out to us, 317-886-8477. Thanks and have a great day.